Welcome back, folks. This is our midweek review. This is our dollar index. This is our daily chart. This recording is the second one I did earlier recording, but the audio did not pick up because I had the settings set for system sound recording, and I turned off the external microphone to be able to capture the music I play on Twitter inside those little video clips. In my haste to sit down and try to get this set up for you because we have things to do later on this evening, I did not set that setting. So the previous recording, unfortunately, I wasn't able to capture, so I have to redo in my best ability to kind of like recapture what I said in the last one. I just wish I had it because I did say some things I probably won't remember in this rendering. But nonetheless, that's the reason why we're late today. It's 5:06 p.m. my local time here, so usually I like to have the video up by now. So anyway, it probably won't be a 90-minute recording like I had going. I just tweeted it. It's a long one, but I have to redo it now. So I got right back into this, and I'll probably tweet and let everybody know I made a mistake again by not having the microphone on. I really got to take my time and double check that before I do recordings. Every time I do these really good recordings, it's always a muted session, and I'm never happy with the second approach to trying to recapture it because it's missed. The magic's gone, So hopefully you'll have a recording that is worthy of your time and appreciation. So here's our dollar daily chart, and I had the volume imbalance highlighted here for your review, and I want to talk about what I see that may be unfolding. I mentioned in last weekend's recording that we were looking at that top of that range, that we're looking for a breakthrough to justify a continuation on the upside from a long-term institutional order flow being bullish. We hit it on Monday. Tuesday we gave back. We weren't surprised by that. I mentioned that on Twitter. And then now today we started to rally. Now, what did yesterday actually accomplish? The volume imbalance in between these two candles' bodies, that's what I'm showing you here. This candle's close. This candle's close, right? Well, it's not going to let me do it because that rectangle's there, but there it is. The candle's close here on this one, and this candle's opening here. This candle's opening. There's no body in between that price range. So the shaded area here, this little narrow shaded rectangle, it's not a supply or demand zone. It's actually a volume imbalance, which is unique to me. So we're literally looking at how price moved up on Monday. We filled in and rebalanced that with a body on the upside. Yesterday, we traded down and offered sell-side delivery. So if this has become a balanced price range, and you can see that the body today, we opened at the low end and we moved up a little bit. I would like to see, and this is what I'm waiting to see, if we trade through that and continuously move higher. That would get me back in sync with intermediate term and long-term bullish for dollar index. I'm still primarily long-term bullish on dollar. What changes that? If we trade back down, like say we don't go up, okay, so we trade back down, this volume imbalance has been rebalanced for the buy side with this candle here, but we now have to wait for price to come back down into this area because that's how a volume imbalance is rebalanced. It's not just filling this area up with one going up. It has to come back down and trade back into it again. So what we've seen here was a displacement after this fair value gap has been traded and filled back in. It has to move above it, which it does. Now we're waiting for it to come back down. What this does, it specifically defines where bullishness and bearishness is determined. In other words, if we trade below this area here after filling in sell-side delivery, in other words, we come down, it would be better if we don't. If we just rebalance like we've done here and expand, that's ideal. But if it does want to retrace, this is where it has to stop. It cannot go any lower than that. Whereas we're not worrying about this level anymore. We're not worried about, because there's no real imbalance down here. We're not looking at this as an order block. We're looking at this volume imbalance because essentially it is the mean of this low to this high, and this is the specific area where order flow would be rebalancing. So what am I saying? Ideally, it rallies from here. If it doesn't, and we trade down to here, it has to find support here. If it doesn't create a buying opportunity here and it trades lower, into November, the dollar will probably keep going sideways and very much likely go lower. Now, that's all I'm going to say about the dollar because there's nothing else to say otherwise. Quickly over into euro pound. Euro pound has obviously cleared its equal highs we mentioned last week. It did that, and then we gave all the range up that we saw as a rally. That's been rebalanced. Now we do have a little bit of BISI here, buy side imbalance, sell side inefficiency. This area here looks as if it may need to rebalance. I don't think that these highs, like a traditional support resistance idea, I don't think that's something that would merit much concern. I think that we might want to come back down in here and clean some of that up. I think the more likely level that would create a meaningful bounce would be this high, not these highs, okay? Because it would really throw off sentiment, because if these give up, everybody in the classic retail realm, they see that as support. And they have offered a couple different instances in here where it could have been interpreted as support, but it's exposed here, and it's a little imbalanced. So all this area here, imagine this whole portion of price action, okay? Imagine that being a Thanksgiving turkey. And you're like, what? Thanksgiving turkey? Where'd you get that from? I'm telling you to think about it from an analogy standpoint. And this is a toothpick, okay? And I've used this analogy before in my teachings in the Mentorship core content. If this was a Thanksgiving turkey and you're holding it with a toothpick, what do you think is going to happen with the turkey? The toothpick's going to break. So if the toothpick breaks, where's the turkey going to fall? Down. So it's going to this is how I teach my kids, folks, okay? Don't make fun of me. The imbalance in here, that would be rebalanced by this price dropping lower. So all of this price action is being held by this one single candle, which is very, very inefficient. So this BISI, buy side imbalance, sell side inefficiency, we have the midpoint of that, which would also be this old high. So I like that level. That, in a little bit of analysis, supports the likelihood of euro dropping, cable being in consolidation to let this pair go down, or euros held in consolidation and cable rallies, and that would also allow this pair to drop. So we have to bear that in mind. Euro dollar. On euro and cable, I'm only going to be referring to the price action on a 4-hour chart because the daily chart really hasn't changed since the last comments we've mentioned concerning it. We have Jackson Hole Symposium tomorrow, Thursday, and Friday, and then Saturday we don't trade, obviously, but Thursday and Friday we may have some impactful statements mentioned by the central bankers that are part of that symposium, and that information is usually leaked. That, in my opinion, is just like another form of these economic reports. They're going to say something knowing that it's going to incite market sentiment, and that's going to create these displacements in price, because they want you to think about what they're going to say or react a certain way, and then many times the price will be doing the opposite. Okay, what I've shaded in here, these are not supply and demand zones. Again, if you're new, this is a fair value gap and the bullish order block. I think that price will want to go lower, clear these equal highs up, and trade down into the fair value gap. It may do this tonight into London. We may trade up into the fair value gap in SIBI. This is sell side imbalance, buy side inefficiency. It only needs to trade up to this candle's high, which is 111.18. So if we trade there, if we trade above these equal highs, and this old high here, we would tap into the buy side liquidity and the fair value gap. It does not need to completely fill in this or retrade back up to the mitigation block here. That would be enough to warrant a London Open setup. So something that you can paper trade tonight. Okay, do not put live funds on this. We're not trading because it's Jackson Hole Symposium. It's a lot of risk. It's just one of those things that lowers probability. All we're doing is studying and seeing if these things still manifest in price, and it's meant for your development and understanding. So two scenarios can happen. If we trade up to this level, that would be an opportunity to see it rebalance and then sell off to this fair value gap. Or if we just drop lower, right below these equal lows into the fair value gap here, they could take the information that's leaked at the symposium Thursday and Friday and then rally it up into this area. Okay, either one of these scenarios is what I'm watching and studying specifically. I'm not telling you which one's going to happen because I personally don't know. Remember what we just mentioned about the dollar index. It's still a 50-50, and I don't like 50-50. What changes those odds? If we trade up to here, then it swings to, okay, they took it to a premium. So where's the discount? Where's the discount going to be? The fair value gap and equal lows, so the sell side liquidity pool. So whichever one hits first, the opposite will be the draw on liquidity. Okay, so that's how you study going forward. Cable. This pair, I got a question this morning. I want to go into the question, answer his question, and then I'll go into the analysis. So one of the questions I get a lot, and I usually respond by way of email, but I've gotten it so much because we have a large influx of new traders coming in. A lot of them come from other mentors, other teachers and such. And this one comes from Chris Lurie's group. And I want to say something, but I don't want to say it and have it taken out of context, because I know there's a great number of you that are actually actively still participants of his Pro Traders Club. And you all know that what I teach here has nothing to do with what he teaches. But I will say this: if you're a new trader and you're like in your month 1 or 2 or 3, if you find the money to do so, look at his material. I think it's good because if you're new, it helps kind of like fill in the gaps, because I don't do like Forex 101. I don't do Forex 201. Like in college, they have levels of introductory and intermediate term. Like I'm like high-end intermediate to high-end. Like there's no really low-end stuff. Like I'm not baby pips level. This is what a pip is, and I don't do that. So you have to have a general understanding of what the Forex market is, and I think if people go there first with him, he does an excellent job of talking about all that stuff. I don't have the time or patience to deal with all that, and most people quit at that stage. So if you can go through all that and have that understanding and you come to me, then you probably have it within you to learn from me. Otherwise, you're probably going to tap out, because this is really, really hard here. So with that said, the question is this. He's been a Pro Traders Club member with Chris Lurie for about 1.5 years. And he mentioned how he does these exercises where he'll draw on his chart and he'll say, okay, I'm gonna put a sell in here, we're collectively, we're gonna sell here. And our stop is going to be here at some other level, and he's going to look for it to trade lower. Maybe he isn't always telling you where it's going to go to, or it's a target or whatever. Sometimes he is. I know I spent a little bit of time with him a number of years ago, and then also when he recently asked me to give some insight on his service and what could be done to make it better. My advice to him at that time was he needs to organize it, because he has a whole lot of videos, but they were just like talking about things that you couldn't really relate to anything. And I watched all of them. It was multiple years of content, but I told this member to look at some of his earlier years in his Pro Traders Club, and he said that Chris has recently removed those years of content, and it's only been a couple years in recent years that he still has as his library. But he did a lot of these types of things where he would say on the chart, this is where I'm going to sell, or this is where I'm going to buy, or whatever, and he puts these little lines in. You just hypothetically watch it pan out. Again, this is the part where I want you to take it in context. This is not me saying Chris Lurie sucks. Okay, I'm just saying from my own observation, this is what I saw. And then very, 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 very few times did he do actual entries with an account, and you watch the account go up and down, fluctuate, and hit targets. You didn't see that much at all when I was there. Now, is he doing it in the last couple of years? I don't know. But from what I gather from the members that are here, not so much. So his our member here, which is also a Pro Traders Club member with Chris Laurie, his question is I teach how you can practice and use institutional order flow and entry drills for like the fair value gap to get in sync with the marketplace and trade. What other exercises can you do, and what would I frame those exercises on? So that way it kind of like gives an example. So the best way I could do it in response was simply just do the exercises and record them. So I do this every single day. And before I get into all this over here, we have a fair value gap. The video I gave you over the weekend, I mentioned we would look for this imbalance here. Price would want to drop down here. It did that. I said if it got down here, if I had SMT and other things that would confirm it, I would look for a long. But since we were up here, and I was drawing your attention here, if we're up here, and I say this is where it's probably going to rebalance, doesn't that really open the door for a short? That's how you practice. So you saw me take shorts, and I covered inside the fair value gap. Look at the price range in here, and look at the Twitter recording I showed. As it was in this fair value gap, my limit order was filled. If I was on Twitter teaching fair value gaps in its true form, you would have seen the shaded area, and I would have mentioned it in my markup for the tweet. This part of the mentorship, this is the benefit of being here, because everything that I do from an executional standpoint is always shared publicly, because I know people are always watching. The Commodity Futures Trading Commission, the SEC, all the governing bodies, okay, that are out there in the United States watch people like me. And because I'm a demo baller, and I brag about it, I want everybody to know that's what I am, because there's no miscommunication. When you signed up, you know I'm going to teach you in a demo account. You can't lose money, you can't make money, but you can learn to trade here. When you feel confident, you, without me saying so, will go into trading live funds. But everything you do in a demo account will be what you do in a live account. And the things you learn as you practice in a demo, you're going to use that as the basis for your decision making. Will it always be a winner? No. And that's the benefit of learning in a demo. You're not going to be influenced by the monetary fluctuations up and down. And when you're doing the exercises and drills on practicing, you're not focusing on the money, but you have to execute. You have to be able to do it with a demo. The process in the ICT mentorship is this. You learn a lot of theory. Once you learn the theory, you have to go into the charts every single month with that content and practice the theory without doing a demo trade. After you've done some time and you feel comfortable with it, then you practice it with a demo. And you practice with a demo for 6 months. If you're consistent after 6 months, at that time, at the minimum amount of time, if you feel like you're confident and you think you know what you're doing, then and only then would you consider, not actively plunging, but consider going into a live account, a very small amount of money, and trade with the lowest amount of leverage there is. That means if it's 10 cents per pip, that's what you use, not what can I afford or what's my maximum. Okay? So with all that said, the answer to his question was my inspiration today in the recording. Now, obviously, I do a lot of things all day long, and the video I shared on Twitter was unedited. I don't have time to edit that kind of stuff. So you see me responding in Twitter, and then I leave the screen alone as I'm working on my other screens, and I'm answering emails, and I'm prepping my charts here, and I'm writing down notes about things I want to talk about, like in this recording tonight. And also making sure I answer some questions that I get in email that will be just too lengthy for me to type out, because it takes too much time to do that. But it would be much more helpful for the group for me to respond in an open setting like I do here. Now, I always answer emails with Twitter, and I always answer emails by way of things I say in videos. I don't always draw special attention to it because it just makes the videos a lot longer than it needs to be, and it just seems gratuitous, and it's really not necessary to say this is so-and-so's email, blah, blah, blah. You know who you are, and those answers are given to you when you hear them. That's the reason why you're supposed to be keeping a study journal, because you're not allowed to post in the forum until you're a charter member. You can't write questions in the forum because when you're new, you're going to have 1,000 questions that are answered in lessons that you haven't gotten to yet. That's the reason why you're not allowed to post into the forum, okay, until you're a charter member. Once you're a charter member, you've digested all the core content, then it's more user-friendly for you to be in that environment, because you're not going to ask redundant questions. You're not going to ask what's an order block, which order block should I pick, because I'm actually going to answer that today in this recording. So have your pencils and pens ready, because that answer is going to be given to you again, like it's been multiple times in the mentorship core content. So if we open the week up here, I'll put the daily dividers on. Okay, here's a new week start. Initial rally, sell off, runs lower, consolidation, and then a sell off again, tagging a fair value gap. I mentioned at the beginning of the week, or at the end of last week, going into this new week, that I had no bias coming in. 1 hour and 8 minutes into the weekend recording, you'll hear me say very clear that I don't really have a bias. Now, I did have a short from last Friday, which was used as a teaching tool by way of Twitter. You will learn when to take weekend trades, but I can't cover that here because there's other lessons I want to get into, even for the charter members. They don't know it yet, so it's not like they learn it in charters. They don't know that yet, okay? But it's New York close fills and London close fills, and when to use those. So, but you need more details before you do that, okay? But you'll learn it. I just can't give it all at one time because I have other things I got to cover. Otherwise, it just makes my job harder. The fair value gap that exists in here from this candle's high here and this candle's low, we have one single candle passing on the buy side here. In other words, it goes up. In that little area, which is shaded in light blue, that's a fair value gap. Go to the left and you'll see the two down close candles here with the lowest portion of the body. It goes lower than this candle. This candle is inside of the range of this candle's low and this candle's high. So this is insignificant. We don't care about this candle. It's this candle we're looking at. So if we look at the lowest down close candle, the opening on that candle, and look at the high, very short in terms of difference. What do I use, Michael, the wick or the body? You use both. You start with the wick and you draw it down to the open. Inside of that area, you find the nearest round 5, or not really, the nearest 0 level, or 5 level, and you calibrate it to that, then add the spread, and that's the level you would buy at. What makes that order block a bullish order block in high probability is there's an imbalance right here. Okay, so a lot of the questions you guys come into my mentorship with is I want to know which order block to buy and which order block to sell, and which down close candle and which up candle do I look for. It's the one that has the imbalance, because this imbalance is the signature that IPTA leaves every single time that sets up a order block. What happens is during the consolidation, and you learn about this in core content, market profiling is consolidation to expansion, retracement, expansion, retracement, reversal, expansion, consolidation, expansion, consolidation. In this portion of price action, IPTA was being held in consolidation with an imbalance up here. Price expands on the upside. That expansion on the upside causes a displacement. You look for a fair value gap, and then you find a down close candle to the left of it. That's your high probability bullish order block. Should price trade down into that and the opening on that candle, which will just drop a level on horizontally, it trades down to that level and a little bit more. You add the spread to that price. That would be where you buy. Because I'm showing these examples on Twitter, I did not do a long down here, because they're going to be looking for why did I buy down here. And if I keep showing examples where I'm buying order blocks, and it invariably people are going to look at this and say, there's that fair value gap thing. Now, people were talking about fair value gap, and some goober online posted a video on YouTube teaching fair value gap, and supposedly some crap called a scam fair value gap, FVG. There's no scam FVG. Either there's a fair value gap, as I'm outlining it here, or there isn't. Now, there's a whole lot more I'm going to teach you about fair value gaps that go along with the algorithmic principles that go with price delivery. This is not all there is about fair value gaps. There's a lot more to it. But to answer the question that plagues everyone that comes in here's mind, what order block do I choose? It's the one that has the imbalance with the signature of a fair value gap and its displacement, a real fast run. Now, what this does here, when IPTA unwinds real quick, price starts to spool, okay, where it creates porous price action. Spooling is where, what spooling is, for instance, price was at the order block, inside the order block right here. It may gap up to 120.70, and then it may trade back down to 120.69, but not 20.68 or 27 again. It stays at 69, then it jumps to 70, then it jumps to 71.5. Then it might come back down a little bit to 70, then it jumps again. The next print is like 71 in 8 pipettes or whatever. And those micro gaps, okay, are inefficient. It starts to spool. Spool is where it gaps in one direction. Where price is spooling in one direction on the upside, it creates that, in effect, a buy-side imbalance. It's too much initial offering with a premium. In other words, they sent it too far, too fast, and did not allow efficient trading to occur at all the prices between the high and where the price originated at the beginning of the move. All we care about is this fair value gap. Okay, inside of this range, I could care less where the smaller micro gaps are, because if you look at a 1 minute chart in here, you're going to see fair value gaps and volume imbalances in a 1 minute chart many times, and they in themselves have reasons and purposes that we'll teach in later teachings. But for now, the real thing is for order blocks to be understood is we have the down close candle, displacement, and an imbalance. Okay. Those three things make the high probability order block, and for a bearish order block, everything will be just simply reversed. Price from the algorithmic price delivery, it goes lower, not because of selling, it goes lower to allow bank traders to capitalize this area right here and go long. Okay? They're not a demand zone, they're not support and resistance. It's a very specific criteria that I just outlined, and it gets much more precise when we get into more lessons about it. But me covering here with that limit order inside that area, go watch that video I did on Twitter, and you'll see as price was going lower and trading into that fair value gap on this candle here, that portion of price when it trades into this area, I'm not trying to draw too much of attention to it in the recording, but you see it here. That's the benefit of being in the mentorship. I show everything I do from an execution standpoint on Twitter, because I know governing bodies on the outside like CFTC, the SEC, any other Fed, would be interested in what am I doing, and am I doing things illegal or whatever. I proudly always say I'm the demo baller. I'm using a demo account all the time. Every result I show is always in a demo account, because I'm never going to be put in a position where they're going to say, oh yeah, he said he was making X money, blah, blah, blah. And I'm not going to put you in a situation where you can lose real money, and equally so, you can't make real money. I'm teaching you price action and how to trade in a demo account. The caveat is everything I'm teaching in a demo account, at some point, you're going to feel the unction to go and try to do that with a live account, with live money. I never tell you that's what you should do. You're going to come to that own conclusion. The moment that happens, you've made the decision on your own. No one emails me and says, okay, can I get into live trading now? Because I don't say yes or no. It's up to you. Okay, so that's how I stay within the parameters of the legal realm. Otherwise, I'd have to be licensed to give trade advice, which is not what this is. This is opinions over a demo account that nobody can make money out of. I can say all the digits in the world of how you can build up a demo account equity, but that's not, I can't go to the grocery store and buy milk with demo dollars. I can't put gas in my cars with demo dollars. Okay, so I can teach you these things, and you can take that same concept, and when you feel the unction to do so, take the risks associated with trading with live funds, knowing that everything still could go backwards on you and you can lose money. Nothing in here is 100%. It's all statistical, it's all probabilities, and you have to operate in that gray area. But once it traded down in that fair value gap and I captured that move going lower, you can see that on Twitter, I didn't want to buy down here. I didn't want to do any kind of long here, because if I did, I'm basically going to show another example where someone could start to reverse engineer everything that I've done here. And price then, from moving in from a premium to a discount, what's price going to do now? Go to a premium again. Where's the premium exist? Equal highs. Okay, price in like a few minutes, like it wasn't 1 minute. It's about 5 minutes or less. It did this entire run. You can look at that on your lower time frames and see that. And it ran the buy side liquidity pool. And then we spent some time here consolidating, and then retracement, then consolidation, and then we should see another form of expansion. This area in here, we'll see on an hourly chart in a moment, but price, we have this high here, 121.03. That's what's being highlighted here. And if we go into an hourly chart, a little bit more context will be available. Zoom out one more time. All right, so we can see that price trades down into the order block, which is highlighted by the red line. Equal highs, they tag them, consolidation, retracement, expansion, consolidation, and now we should see another point of expansion. Where should it expand next? Well, we've already cleared a point of liquidity up here in a premium level, so where is imbalance or where is liquidity? We have an old low here. We have exposed buy side imbalance, sell side inefficiency. One single candle has passed on the upside. Let me take these vertical lines off because it's a little bit distracting. Let me zoom in one more time. Just get in here tight. This candle's high here, and this candle's low. That makes the fair value gap, or BISI, buy side imbalance, sell side inefficiency. Consequent encroachment is the midpoint of that gap. It's only buy side offered here. We've seen it trade down to here, right in here. Okay, right here is where I did two trades today. I did a long based on the fact that we ran below this sell side liquidity pool, tapping into that, and we also traded into the fair value gap. This point at which it dropped down below this low, that is the low-hanging fruit entry drill that we taught when you were being told how to practice with a fair value gap. And go back and listen to, a couple months ago I did it. I don't recall exactly what month it is, but it's clearly noted in the recording in the description, how to practice with the institutional order flow and entry drills. So that once it tapped into that level, we're going to drop into a 15-minute time frame. You can see we traded below it here, and then when price was still hanging around the rejection block. What's the rejection block? The lowest down close here. Okay, so when we're at that price or lower, I want to be buying, and there's an imbalance right in here, fair value gap. If you drop down into a 1-minute chart, you're going to see that that's actually a breaker. And I got a question. This is another answer to a couple questions I get. Do I look for breakers and things on a 1-minute chart? And the answer is yes. If there's ever been a question about whether or not that stuff doesn't or does work on a lower time frame like this, let today be an example of how powerful it is, because it certainly does work. So we have have a high, a low, and a higher high. The buy side liquidity pool resting above here. In other words, people that were going short, they were dropping their stop down, and before it starts to make a real big run, they come up and knock them out. So IPTA does this on purpose. Okay, it doesn't see your stop. It just knows that logical progression with markets going lower, someone is short and they're going to lower their stop. So before the nice big expansion move, they always like to go up and run their stops out. that's that's being seen here. Price goes down, hits the fair value gap on the hourly chart, and then we start to consolidate. What's your core content tell you? From a consolidation, we're going to see expansion. Where are we at in the scheme of range? Where are we at in terms of discount to premium? Here's our high and our low. Here's equilibrium. We're down here. So is that a discount or is that a premium? We're at a discount. So if we're at a discount, it's going to want to go up to a premium. As we go up, what are we looking for? Well, we have a liquidity void. Keep going up. What's next? We have a breaker. The last down closed candle here. That's what I annotated in the recording today. That breaker was my target from entry here to here. Now, right away, like I mentioned on my tweet, goobers online that don't understand what I'm doing will see, oh, he's only capturing 10 pips, big deal. The power is this. How do you practice? Well, if you're at a discount, you want to look for a premium array. This is a premium array where the price should logically be drawn to. Price could have hit this level and went lower. I didn't know that, and I don't care. I want to find opportunities where there's going to be a specific directional bias achieved, and the market's going to reprice to that level. Did it spend a whole lot of time once it started moving to get up there? No, it was really quick. Why? Because it's seeking liquidity. I took the full position off at a limit order at the breaker. Okay. The next point is I drew your attention by saying I was interested in and I was watching the liquidity above these equal highs on a 1 minute chart. I don't care that I got out at this point here with the full exit. I don't care about that, because once I got out of this move here, if it got up into here, I knew that we would probably want to run to this next level of premium, and in this area here I would pick up more orders. We had a fair value gap here, which I did not draw any attention to in the recording. Price traded down into it. This is the entry point where you would have had the entry. I purposely waited for this candle to start painting, and then I went long because I didn't want to draw any attention to this area here, and also I overlapped with what everyone is aware of in the free content, in the free tutorials, which is the bearish and bullish breaker. In this case, this is a bullish breaker because we have the lows being ran out here, and then we traded back above it. So we want to look at this area here. If it trades back down into it, we'll see a capitalization of buying. I bought here, and I annotated my chart before the fact saying that 121.50 and just above it is where liquidity rested. Okay, let's go back out to the hourly chart, and I'm going to zoom in and give you a little bit more context that's not shown in that video. This candle's low here, 21.55, and this candle's high right here, 21.53. That small little segment where one candle passes down, that little section right there is a fair value gap. If price trades up to that, that is a premium array. Now let's drop back down into a 1 minute chart, and you'll see the magic of that exit today, where it was right as it slams into that fair value gap. I'm wasting too much time doing it like that. So I bought it here, told everyone in the recording by my chart annotations that was being written at the time of the recording, and you can see me doing that. It wasn't like I just overlaid something like lipstick on this video here for effect. I was waiting for it to trade to 121.50 and above, and this is 121.50, and price expanded up with a large range as I called for in the recording, because I'm anticipating all these things. I'm looking for all those things to happen. Now, I was juggling a lot of different things as I was doing this, but I was looking to try to peel off more at the time as it hit here. But you can see I did get one portion of the exit off. There's a little thing. There's a couple things that are a little different with MT5, which is what's being used in my recordings here, because when I had to get another AVA demo account, because I think they found out that I was a US person and it didn't work anymore. Other people are saying the AVA demo trade doesn't expire. I've had 2 expire on me, so I'm not sure what the deal is with that. But nonetheless, I got remaining portions off here, and by the time I got out of on the other ones, it's down here. Okay, and because there was another fill, so it's a little bit higher as it went down into the order block. I mentioned at the time in the recording that they would come down here again, pick up more orders, and then expand on the upside. It did that. Okay, watch the recording again and look at the chart here, and you'll see everything that I teach you is being shown here. Now the power with this is, now, because I already know some of you are very cynical, this is only a 1 minute chart, Michael, and there are only 13 pips here and 10 pips here. Here's the paradigm shift. Okay, if you're watching TV, if you're listening to music while I'm talking to you, turn everything off and really pay attention to this part here, because this is the secret sauce. Okay, this is the thing that helps keep you motivated, because a couple of you have said that you're a charter member, you've either blown your account, rushing, trying to do more. I told you not to trade in August and you pushed it too hard. These are all lessons to learn from. I did all these same things. I've done all that stuff. Okay, I tell you these things so you don't go through the pain yourself. And some of you, for whatever reason, subconsciously or willfully, you just want to go through it too, like it's a battle scar, and we're all going to be showing each other, look at this scar, like the scene in Jaws, where they're all pulling their scars out, showing their little trophies. You don't need to have scars in trading. It doesn't mean you're not going to get them, because you will, but you don't need to try to get the worst ones to, try to say, yeah, I earned my right, because if I wish I could go back in time and not have done the stupid stuff I've done. But anyway, if we're down here and this was a hourly chart, that means every one of these candles are representing 60 minutes worth of data, not 1 minute. If this was shown to you as an hourly chart, these trades would be more meaningful to most of you probably, because what would that mean? The magnitude of the move wouldn't be just simply 10 pips. It could be as much as 30 to 50 pips between the point of entry up to the breaker. And from buying here up to reaching to the mid figure and the liquidity resting above that into the fair value gap, you can see beautifully as it hits the bottom of that fair value gap, that's my exit. Hello? There's nothing random here. There's nothing form-fitted. It's absolutely understood before the fact. Now, I know there are certain things that's going on algorithmically. Again, I will start teaching that in 2020. But I do this stuff every single week as a means of inspiring you. Do not discount practicing on a 1 minute chart. It gives you so many opportunities to practice and have so much experience by doing so. Because once you do this and you consistently do it with a 1 minute chart, number one, it's going to quickly prove that price is not random, which most of you probably already arrived at since watching my stuff. But you can predict it very, very precisely. If you can do it on a 1 minute chart multiple times, it creates an opportunity where your confidence goes through the roof. Then, whatever you do on a 1 minute chart, apply it to an hourly chart. You'll catch 30, 50 pips here, done. Next setup, wait. Pull in the liquidity here, great. If they're going to run that liquidity out, see what it does. It starts consolidating. Fair value gap is formed, trades down to the fair value gap, buy it. Why? Equal highs and mid figure. Fair value gap on the upside. Oh, really? Yes. If this was an hourly chart, maybe 30 pips. It's hypothetical, obviously. I don't know what would have been, because this is all just from just look at an hourly chart and count how many candles are here, okay, and see how many pips an up move generally takes place in that 60-minute chart, and use that as a general rule of thumb. Now, it's not perfect, but it will help you think about how much magnitude is available. So between this move here and this move here, that could have been a whole weekly haul if this was an hourly chart and every candle represented 60 minutes each. Now it gets interesting. Ready? Let's say that this was a daily chart. Do you have the patience to buy it here and wait for every one of these candles to be a daily close to get to these levels? Because everything I'm showing you here happens on a daily chart, just like this. It happens on a weekly chart, just like this. It happens on a monthly chart too. It happens on a 15-minute chart. It happens on a 3-minute chart. It happens on a 5-second chart. You see where I'm going with this? Once you understand where liquidity is in the present institutional order flow, they cannot hide it from you. You can't hide it from you. So don't discount 1 minute practicing. This is what it looks like when you practice. I do this every single day. I could take hundreds of pips a week out. If I had the time, which I don't have a lot of time, but I had to show this today because there's really no way of answering the gentleman's question without just simply doing it. And if I ever have another conversation with Chris Laurie, I'd like to be able to tell him to do this with his group. If he did this with his group, I think it would be much more impactful, encouraging, and evidence to what he's trying to communicate to his teachings to his students. But I can tell you, I didn't see this when I was there, and I don't see anybody else doing it either, because most people won't ever talk about using a 1 minute chart. But I can do this on any time frame, and the only way I know that I can trade in the future is because I've convinced myself that I know how to do it on any time frame. I started doing a lot of 1 minute work and 5 minute work when I quit my job back in the 90s, and I had time to be able to do it. When you're working a job, you can't really do this, but you can practice on whatever time frame that it allows you. Your smartphone at work, if you see a level you like, practice it. Get in there and just do it, and just take logical price levels. When you see all these things nest out together, it's very encouraging. And if you start doing it week after week after week, you will not have the problems that some of you are feeling. I just got an email, not an email, what do you call it, a direct message yesterday from a charter member. He blew his account, doing everything I told him not to do this month. August is a terrible month. I even said this, I blew my accounts in August. Okay, I've done that. If I've done that, why are you trying to do it? Why do you do that? Subconsciously, I think some of you just want to have the pain. And you got to watch, or listen to rather, that recording I did on SoundCloud. Are you deserving? Because I think subconsciously some of you have these tendencies to self-destruct. And you have to give yourself permission to be successful. And with that permission comes with it responsibility. And you have to be really responsible with your actions. So where we go from here, I don't know, to be honest with you. I don't know where we're going to go. And that's the reason why I said at the beginning of the video coming up to this week, last weekend, the Jackson Hole Symposium, Thursday and Friday, is going to create volatility. And that volatility may be problematic for you. But anyway, as price went up into here, hit that fair value gap, we had, by the time I bailed out on everything and got back to doing my administrative work, we had a market structure break here, imbalance, SIBI, rebalanced, consolidation. What's it going to do next? Expand. Where's the liquidity? It's already tapped this, so it's going to look for a discount. That's liquidity here, below here. We have a imbalance, buy side imbalance, sell side inefficiency, fair value gap, bullish order block. Why is this a bullish order block? What makes that order block special? We have displacement. Price starts to spool. It's skipping really porous, runs really hard. And it leaves a fair value gap here. So watch this. Price can reach down to this order block. If it breaks below here, it's consolidating. It should expand down. Why? Because it rebalanced to this price point here, and it's already ran stops above these equal highs, and it hit the mid figure, and it also hit a fair value gap. So IPTA will do what? Seek liquidity at a discount. That's here. All of the imbalances, liquidity pool here, and it should hit this, and if it does, it should bounce. Let's go out in time. Hits it. What does it do? It bounces. Hits it, consolidates, hits it, doesn't hit it, rallies. Look right in here. Volume imbalances. I'm going to just do a whole block of both of them. You can do this on your own. There's missing bodies in here. Right there. Okay. Price trades up into it, perfectly closes it in, starts to show a displacement to the downside. Doesn't quite get to the order block again. Rallies up, volume imbalance, hits it, comes back down, and now we're in a time of day where it's really spotty and it doesn't really make a difference. But every day there are multiple opportunities for you to look at the 1 minute chart and just internalize that as an hourly chart or 15-minute chart and practice. Low resistance liquidity runs from a discount, which is what I used today, was a run on sell side liquidity. So after running a sell stop liquidity pool, using a draw on liquidity up to a bearish breaker. Even though the bearish breaker didn't offer a sell, it was my target on the upside, and that range is what I used for here. What makes it so exciting is the people that have appreciated this lesson and all the lessons that were similar to this in the core content is if you bought down here and it ranges to this low here, say that's 80 pips. That's a perfect range for me. That's a one shot, one kill. I'll trade it and look for that run on liquidity. I'll take my profit off there. I don't do partials at 20, 30, and 50 because I know what I'm looking for, but I will do this. I'll take off my first partial there and then take 20, 30, 50 pips if it runs beyond. That's how I manage that. Okay, so I've answered a lot of questions in this presentation. Now I want to talk just a couple minutes about sticking with this. Some of you, and I've received either by email or tweets directly, this feeling of I feel like I'm learning things, but I feel lost. I can't put it together. If you're in the core content and you're not a charter member, you're really going to feel like that. That's normal. If you're a new charter member, you're still going to have residual doubts and concerns, and that's still very normal. If you're a charter member and you've gone through all 12 of the price action models and you still feel that way, that's still normal. You should not feel that once we go through all of the individual trading plans in 2020. We're going to go back through all of the individual price action models 1 through 12, and I'm going to flesh them out so that way you have a complete what to do, when not to do, and that's it. Now, after I do that, any future lessons will be just refinement and algorithmic only, and which we'll be lacing throughout 2020 and going forward. It gets really complicated in those levels. So just know that you're always going to have this sense of, I don't know what I'm doing right now. But you do know the things that you do know. And anytime that you feel uncomfortable or unsure about things, go back to the beginning, month 1, and start going through the content again. It takes a lot of time, Michael. Yes, just like I promised. It's going to take you a lot of effort and a lot of time to do this. It's not easy. It ain't going to happen the first time you pass through the information. It ain't going to happen for the first 5 times you probably pass through the information. You're going to have information overload, and you can't retain it all. Go back through it, okay? I promise you, okay? I promise you. Everything you're learning is worth it. Nothing is contrived. Nothing is form-fitted. Nothing is photoshopped. Nothing is pretend here. Everything I tell you is exactly what's going to happen. Period. End of story. You can argue about it all you want, but I show you every single week. And I'm telling you, you can do this. If you're on the fence and you're wanting to quit, and you know without a doubt, you know you can't do this, then there's no shame in. That's it. You made your decision, and I would not say anything bad about that. You know your limitations. Do you want to spend the rest of your life working for someone else, though? Because if the answer is yes, you can do that, then sure, quitting that's the option. But if you don't want to work and toil the rest of your life for whatever amount of money that person that you work for decides the prostitution of your personal time is worth, then by all means go ahead and quit. But I'm going to ask you this. Do you want that for your children? How can you honestly say that you want your children to prostitute their time for nothing? There isn't a job out there that could pay me. Every job is a job that underpays to me. I don't care if you're a surgeon. I don't care if you are the top of your industry, okay, you're underpaid. You're underpaid. I can make whatever I want to make. I don't have a limitation on what I can earn. I don't want my children to have a limitation on what they can earn. I don't want them to have a limitation on what they can do in life. I don't push them into college. I try to tell them not to go to college. But my daughter's in college. She wants to be a teacher. That's commendable. I love that. Will she make a lot of money in it? No. And she doesn't care. She's passionate about it. Your decision is not just you. It's your family behind you. You're learning a skill set that has the potential to reshape your entire family history. Future history, but change it and reshape it. Because prior to you, no one knew anything about this. You are the legacy stone. You started it. You laid the foundation. And everyone past you and your family will learn how to master money. Think about that. What's your time worth? If you want to quit, go ahead and quit. I'm not here to twist anybody's arm, but I just want you to really weigh it all out. Okay? I had a guy tell me he blew his account out yesterday. Oh, I did it again. I'm done. Been trading 10 years. It's a struggle. I just simply can't do it. And maybe that's true. But I'm asking you this, and this goes for everyone. When you feel like you want to stop and quit, that's your time to take a break. I had to take dozens of them in 27 years. I haven't had to do it in about 15 years, but I had to take them. I had to take breaks. Quitting is not an option because you're never going to ever quit this. You're going to always want to go back to it. If you decide that you need a break, then rest. Don't watch my videos. Don't look at the market. Take a break from it. And if it feels like it's drawing you back in, you're a trader. If you spend time away from it and you have no impulses to ever want to go back into it again, then you're probably making the right decision. But remember, you're working the rest of your life. And you're going to get paid with money that has been determined as value for your life by someone else. They're going to tell you when you do the work. They're going to punish you when you don't get there. They're going to punish you when you call out because you're not going to get paid for that day. Or maybe you do, maybe your salary. But you're going to have animosity built around you. Your coworkers are going to they're going to be pissed off because they had to pick up your workload. You got to commute. You got to pay for all those transactions to get you to your job. Everything you eat, you have to pay out of your pocket, and there's no tax benefit of doing that. When I go out to eat, 50% of that is a write-off. If I want to take my whole family out and spend $1,500 on food, not worry about price tags, I know $750 of that is a write-off. When I put gas in my vehicles, every bit of that is a write-off. When you're working for somebody else, you eat it. When I go on vacation, those vacations are a write-off. When you go on vacations, they're expenses. You really want to go back to that? Because you're learning how to do what I'm telling you I do. Some of you that are struggling think this is an easy decision. It's too hard, I gotta quit. It's not an easy decision. Wait till you spend some time away from it. You're gonna ache. You're gonna regret that you just feel like you want to quit, and you're gonna be like, I should have never did that. Let me get back in here and start studying. That's normal. That's normal. This is work. You are working for yourself. You're just not collecting the pay yet. You're building your business. This is your entire family's legacy. You're shaping it. You're that person. You're going to reshape everybody after you if you just simply do the work. It's not a sales pitch, folks. I'm talking to charter members. They've already paid. I'm not twisting their arm to keep sending me money. This message is to that person. He's already paid me everything he's ever going to pay. But what I'm telling him, you need to know, because there's going to be several times, and maybe you're up against the wall right now, month whatever you're in, month 6, month 9, 10, 4, month 2, maybe month 1, you're thinking, man, this is too much. You're not quitting. Trust me, you're not quitting. You may quit the mentorship because of feeling like you're wasting money, you're wasting time, this is too complicated, this is too hard. There's nothing out there that you're going to click and say, this is easy, I'm making money. It doesn't happen like that. It doesn't happen. Trust me, it does not happen. I've spent fortunes trying to find that stuff. Paying people doesn't happen. You got to do it like this. Period. When you do, no one takes it from you. It's yours. You want to go to work for somebody else? Go right ahead. That's just not me. My time's too valuable. There isn't a job on this planet that can pay me. There's not enough money for them to pay me to be anywhere whenever they tell me to be there. I say when I'm going to be somewhere. I don't want to go to work. I don't want to do something in the mentorship. I don't want to answer emails. I don't want to trade. I don't need to. You got to go to work tomorrow. You want the rest of your life to be like that? And you're telling me that this is too hard. I'm telling you, going to work tomorrow is too hard. I just can't see it. There's too much to do in this planet and world and life. It's just simply too short to be given all of their time and opportunity, energy, potential. You're going to give it to somebody else and they're going to put a price tag on it. They're going to tell you what that's worth. No, thank you. Oh, no, thank you. I ain't got time for that. I don't have time for that. That's why I said when I was 20, screw this. I am out of here by the 40. By the time I'm 40, I'm not working for somebody as an old man. I got too many things to do. And once I realized I could do it, forget 40, it's got to be 30. And then I realized, hey, I don't need to wait till 30. I didn't know what I didn't know when I first started. I thought I had to do 40. I had a 20-year plan, and that changed into a 6-year plan. That's a big difference, isn't it? What was the motivating factor? I don't like being told what to do. I'm just a nonconformist. I don't like it. I don't think anybody's in a position except for God to tell me what to do. And that's just me. Maybe you're not like that. Maybe you don't mind working the rest of your life. Oh, go ahead. You're going to give 40 hours or more a week that you could be spending with your family. How much do you care about your family? I didn't have kids yet, but I knew I wanted to spend time with them. I didn't want to ask, hey, can I take off next week? I'm going to take my family to a vacation. Nobody's telling me I ain't going somewhere when I want to go somewhere. It's as simple as I'm doing it. Although I got to admit that my wife sometimes tells me what I'm going to be doing. But you know how it is, gentlemen. So, again, all this feeling of uncertainty, that's normal. That's the part that you got to grind through it. How do you beat it? How do you get through that? Go back and watch the lessons you've already watched and feel like you've learned. And then you'll realize, hey, I know what he's saying here. I know that. And then you'll appreciate what you have learned. Because right now, what you're doing, all of you are doing this. Okay? And it's a normal function of learning. You're taking what you think you should know, which is an uncertainty and an unknown thing for you right now. You think you should know how to trade because you've been in here X number of months. You're a charter member. You should know how to trade. No, you shouldn't. All that means is that you know or are familiar with core content. And you're going through price action models, which are not trading plans. It's a process. Core content, price action models, trading plan, algorithmic principles. You have, whether you want to realize it or not, it's a 4-year plan here. It's just like college. It's as simple as that. After the 4th year, you know everything I'm going to teach you. That's it. Everything after that is we just do it every week. It's as simple as that. I don't reinvent the wheel every week. I'm doing the same thing I do all the time in month 1. Because I know everybody on every membership level has access to month 1 content. But you all think I'm pulling new card tricks out of the hat and it's all something different. And it's always still month 1 content. It allows me to do things very simply. I can share it on Twitter and nobody knows anything. And I can amplify the teachings in here. All the work is you taking all the other additional amplified advanced lessons and dig into the charts. You'll start seeing it if you put the work into it. Oh, you're giving me that. You think I'm lazy, Michael. You're talking to me like I don't work. Man, I've been watching these videos. That's not work. You can binge watch Netflix and that's not work. Just because you're listening to me. You're listening to me right now. That's not work. It's probably pissing you off. It's probably annoying you. Oh, this is ridiculous. I shouldn't have to. I paid for this? Yeah, you did. It's exactly what you need. It's what you need, man. You need this. Whether you want to have the lesson that blowing an account gives you or not, you need this lesson, because if that's not the catalyst that makes you feel like this is something too much for you, something else will be. This is a career, and everybody has peaks and valleys, and no matter what it is, you're going to have adversity, and you have to have the visibility to look beyond it. You're not gonna walk through this and say, man, this is a cakewalk. ICT made it so easy. No. It's initially really, really hard because I'm not sugarcoating it. Listen to what I'm telling you. It's the same thing I told you when you were signing up. This is hard stuff. You are the most difficult person to work for on this planet. Didn't realize that, did you? Because if you're wanting to quit, that's what you're saying. I don't want to work for this guy. I don't want to work for this woman. They're too hard. They're unreasonable. I got to quit. And the ones that are sticking with it is their perception's different. I love myself too much to quit this. I love my children too much to put this aside and say it's too hard. I love my family and their future too much to let a little bit of discomfort and adversity talk me right out of doing something that's really my destiny. Which are you? Are you self-centered and self-absorbed and only care about your short-term feelings? Or do you have a long-term perspective on securing a future for your family that no one can take away? You can spare them all of the hardships that this world puts on everyone. My kids asked me when I was younger if there was any job that I liked. It was the vending company job. It was my last real, quote-unquote, working overtime kind of job, 6 days a week kind of job. I loved that job. I could fix the machines. I could fill them up really fast. I could unload 12, 13 cases of soda in 2 or 3 minutes. I could flip them in there so fast it was crazy. When I first started, it sucked. The little plastic things that the cans stay hanging in when you grab a 6-pack of cans of soda, those things used to cut my hands out because I have they call them city hands. I have really baby soft hands. After a couple months working there, I didn't have that. But since not working, obviously I have city hands again. I loved that job because I got to see different people, and it was always different. I was in different places all the time. And yes, I worked 13 hours a day, and yes, I worked 6 days a week, and I didn't make a whole lot of money. $183 a week paycheck, that was the check I got, and then the owner of the company gave me $51 bills. Man, I settled for that. And at the time, I thought that was what I was supposed to do. And then I saw how much money he counted every day, and I was thinking to myself, man, he really is doing good here. And my route did just under $5,000 a week. And I'm thinking, man, I want to do this. I want to have my own vending route. I could really build this up. Because if I was making that $4,000 plus a week, and the profit margin is around 50% back then, I don't really know what it is now, but I'm sure it's probably comparable. I was thinking, man, if I did that, I could really have a good lifestyle. And all that changed in my perspective when I borrowed that Entrepreneur magazine. He could have said, no, I'm taking it home. And maybe it never would have happened. I was a trader then. But that little classified ad in the back, and I got scammed into buying some stupid book by Ken Roberts and wasted my money the first trade with an orange juice, trying to trade in the option market, calling up a broker saying, let me get in there and get that option for orange juice, and then losing 50% of my money the first trade in one 24-hour period. That could have been it for me. Oh man, this is too much. I put $1,500 on the line, and I lost $750 while I was sleeping. Woke up and then it's gone. This is trading. This is what I signed up for. You know how long it took me to save that money up? And I just lost it? Welcome to trading. You don't know what you're doing? There's a cost. There's a cost. This world costs a lot. It costs a lot. Time, opportunity, relationships. How better would your life be relationship-wise if you didn't have to go to your job? How about being a father or a mother? How much would that improve if you could have all your free time planning how your children are going to receive their welcoming home after school? Contrast that with what now. Many times they're probably already home. Maybe they've done their homework. Maybe they didn't do their homework. But you're on your way home. You're sitting in commuting traffic. Sick about it. Because the best thing you got is the Saturday and Sunday coming. 4 days later. You got to do the same stuff. 4 more days. You're hot. You're pissed off. Your air conditioner ain't working because you ain't got enough money to pay for it. Man, I've been there. And I come home, forget to get diapers. All you want to do is come home and relax and have a little bit of peace of mind knowing that you got through one more day. Let me get a little bit of TV in. Maybe have a little bowl of ice cream. Maybe go to the bar real quick. See my friends. Have a little bit of happy hour. Because I got to do this all over again tomorrow. I got to do this again tomorrow. And the day after that. And the day after that. And the day after that. And hopefully on Friday, I'll have a little bit of money after I deduct what I have to pay to keep doing what I've been doing. Just eking by. Existing. That's what you're telling me you want to do? You're quitting because that's what you want to do. Huh? If that's what you want to do, be my guest. I mean, I'm not a fan of that. I wanted to get the hell out of there as soon as I could. And nothing was stopping me. I was getting it done. I gave up everything. No relationships, no spending money, no buying anything. Everything was this. Now, do you need to go to that extreme? Sure. That would be nuts. Is it necessary? No. You got to keep showing up. You got to keep doing the work. And And I promise you, you will get this. And once you do, once you get this, and it's understood exactly what you know, you can go into any market, anytime, and pull out profits. It sounds like arrogance. It sounds like pomp. It's just confidence. In the contrast of all these other people out there dancing around, portraying that they're so professional. They know what's going on. And here I am, some kid, grew up in Middle River, it's 47 now, and I've turned everything upside down. Every single week, I'm doing exactly what you do. I go to work. I'm doing the same thing I was trained to do. The pay scale's just better. If I don't show up, the charts don't pay me. Everybody's got to work. You just got to decide who you're working for. Are you the best boss on the planet? Are you the toughest person to work for and you got to quit? Which is it? Because I can tell you this. None of you are really ever going to quit. One of two things are going to happen. You're going to quit, realize this isn't right. You got to go back in and dig in deeper. That's what you should do. Other people will say, I got to quit. And then you're going to realize that you don't have any interest to go back into this and you've made the right decision. That's how you know. But if you have any draw, any desire when you spend time away from this to get back in, you're a traitor. Embrace that. Manage yourself. Master time. Figure out what you have to do. If it requires you to work a second job, do it. Do it. Look, you are not exempt from hardships. It's been promised. Everyone's going to have to do that. Genesis chapter 3 promised it. Whether you want to accept it or not, God said this is the way it is. So you can either work your ass off for somebody else, hating what you do, not getting paid enough, being separated from your family, being told when and when you can't spend time with them, when you can vacation, and you can't dictate how much money you make and when the increase occurs. You might want to put in a request for a raise. When's that going to really pan out for you? Or you can change all of that. Take yourself completely out of that paradigm. You're staying in that prison cell with the door wide open. You've put yourself there. And I'm sitting here out there on the other side telling you the door's open. You just got to get up and take the walk out. But you're scared. Or lazy. Oh, don't call me lazy. It pisses me off, Michael. I told you I've been watching these videos. And I'm telling you that's not the work. What you see me do here today, when I tell you to practice and practice and practice, this is what I'm talking about. They won't always pan out. Sometimes you'll get it wrong. But guess what? You're in a demo account. Did you lose any money? No. Should you get emotional when it doesn't pan out? No. What should you do? Identify what happened in reality, annotate your chart, save it, put it in your journal. Done. Next. Over time, you're going to learn which things that you gravitate towards, and when the market speaks to you, there it is. That's your opportunity. That's your niche. That's your market setup. That's your model. All of us have specific things that we feel comfortable with. I can't take you and press you like Play-Doh into a mold and say, okay, see, next, let me grab the next guy or girl and push you into that mold, and you're all going to get shaped in the same ICT mold. No, it doesn't work that way. No one pushes anybody into a mold and makes duplicate cookie cutter success stories. It doesn't happen. It does not happen. You're learning the best business on the planet. I want to get completely out of real estate. I'm sick about it. Tenants, management companies, dealing with all that crap. Okay, it's just a worrisome thing. In Maryland, when you buy a property, there's a lot of lead pipes in a lot of older homes, and when you buy like apartment complexes, or if you buy an older home, many times you don't know if there's asbestos in there that costs money, and everybody's doing lawsuits like galore. It's always somebody trying to get the easy money, the lawsuits, and it's just better to do this than that. That's my personal experience, and that's my opinion. I'm sure there's a lot of you guys that trade and also do real estate. I can tell you nothing's better than just simply trading. I've owned businesses. I've owned real estate. I've done online companies. I've done mail order things. I've done, now I have this education medium, the mentorship. All these different income streams. I can tell you that real estate is the least. I don't like it. There's just a lot more stress involved with that than trading. I can do trading anywhere. I'm trading paper. That means I don't worry about a house causing someone harm. I don't worry about vacancies. I don't worry about destruction and having to do claims with insurances and have everybody come out and do rework it. When it's vacant, I'm not getting income. When I'm not taking a trade, I'm not losing money. I don't have to worry about getting a good deal, because when you make money, it's at the table when you buy the home or the property. These are lessons I had to learn. You're not going to find something better than this. I don't care what anybody can say whatever they want to say. You can say I'm biased, whatever. I've done all that stuff. This is the best. This is the best. I don't need all these screens and these computers I have in my office. I don't need all those things in my house. I have computers all over my house on every floor. If I want to have a view of a chart, I just walk over to it, touch the mouse, make it go away from its sleep mode, and there it is. My charts are up. Dollar, euro, and cable. Every floor of my house has that. My bedroom, I have a monitor next to my bed, and I have one in my bathroom. When I'm in my shower, I can see the charts when I'm in my shower. That's how plugged in I am. You don't need to be that much like an extremist. Like to me, I'm obsessive. Like I'm in there. I'm watching things. Little fluctuations don't mean anything to anybody else. Like on a 1 minute chart doesn't mean anything to anybody else. To me, it tells a whole story, because that one single 1 minute candle changes the whole paradigm of what is viewed as a sentiment on a market, and it either gives me a timing or negates an idea. It's all context. You don't understand those things because you haven't been doing it enough, but spending time with me every week, listening to these woodshed moments. I'm talking to one person right now. One person in particular. But all of you need to hear these things, because you're going to want to quit. You're going to want to say, man, it's too hard. I try to teach my, the oldest son I have living with me now, I tried to teach him certain aspects about charting. And as soon as he starts listening to me, he gets antsy, he's moving around. He's zoning me out. That's what he's doing. It's uncomfortable. It feels like work. And it's hard. He doesn't want to apply himself. I know what that's like. You feel the same thing he's feeling, and it's the same thing I felt. When I was growing up, I didn't read a lot until I had my first lucid dream. Lucid dream is when you wake up in your sleep, in the dream, and you realize you're dreaming, and then all of a sudden you can do whatever you want to do. And in my personal life, I cultivate that. I like to do a lot of that. And if you don't know what that is, look it up. It's really interesting. But I can do that a couple times a month. I can wake up in my dream and do whatever I want to do in my dream. I didn't read until I had that first experience, and then I started reading everything about astral projection and lucid dreaming, and I read a book called 7 Pound Universe, which was very fascinating because it would tell you how the brain works and the effects of when people take drugs, what kind of effect it has on perception, and I just get really fascinated with all that stuff, and then it became this insatiable desire to read and read and read. And then when I got involved with trading, I had already become interested in making myself better. I had an interest in becoming a better me. And when I started applying that same level of interest in dreams and meditation, it allowed me to have a very ease of just digesting everything I could get my hands on. I'd work, and any kind of money I'd have over my bills, I would buy books. I would buy books. And 2,000 books later plus, I can tell you that I know a lot. I know how retail traders are thinking. I know what they're thinking. But that's not how I want to trade. I want to look at when those opportunities are best suited to hurt them. That's how the bank's algorithm is going to work. And you see me using it here. Now, if I'm looking at an hourly chart here, and I know that there's 80 pips between where I'm trying to get in at up to here, that's a one shot, one kill for me. Then I'll take that trade. I'm not going to take partials in between. I teach you as an individual trader to do that while you're learning. Pay the trader. I know because of experience, I want that full pull. And then after I get my one shot, one kill, then I leave those portions on. Then if it runs 20, take something off. It runs 30, I take something off. It runs 50, take something off. And then I don't know what it's going to do. I'll just leave this small little portion on there. That's how I trade one shot, one kill. But you have to graduate into, if it gives you 20, pay yourself. If it gives you 30, pay yourself. If it gives you 50, pay yourself, because you did a half a penny move, and then you could have a meaningful retracement. There's so much available to you. You just don't know yet. I didn't know that I would be this much of an influence in the world of Forex when I first started trading. When I first opened the book up, it was about commodities. I didn't know what Forex was. It wasn't even, you wasn't even allowed to trade. It was completely regulated. Only banks could trade foreign exchange. When I first started, you couldn't trade foreign exchange. You had to trade through the futures market. So you don't know what you're trying to limit right now by saying, this is too hard. It was hard for me too. I wish I had someone telling me what I'm telling you right now. And again, this member's already paid me. I'm not going to get any more money from this person. It's not a sales pitch. It's done. I'm just talking to really real with them. You can't limit what you're able to do once you understand this. Like, you have no capacity to really understand what it's like knowing that you can go in any market asset class, any time frame. It's a personal ATM machine. Oh, you've gone over the deep end now, Michael. Now you sound like those guys on Instagram. I had a guy post to me because I said put an order in for the 2020 Corvette. The 2020 Corvette's $74,000. It's not a McLaren. Any one of you could buy that car. Okay, it's nothing special about it except for I love Corvettes. I'm not turning into, and I'm not like these Instagram people. I'm bringing taste to that. And I'm going to show you that there's nothing flamboyant that's required to live comfortably and tastefully. Some of you probably will become the next Instagram sensation because you've made a lot of money, and I'll be watching you. I ain't got a problem with it. But that's just not me. But there is no limit to how much money I can earn. None. There's zero limit. Can you say that about your job? What's the ceiling? What's the price ceiling, or salary ceiling, I should say? That shows you how long I've been away from working. What's the limit, if you will, in what you can earn in your job, in the field that you work in? I guarantee you that's very, very low if you're honest with yourself. Are you happy really with that? And look, I understand. There's people in here, oh, I don't want to be that rich, Michael. I just want to do really well. Look, you're lying. Okay, stop. That's crap. You're lying. Nobody gets into this. Nobody gets into this and says, I just want to pay my bills. I just want to get a little bit of money so I can pay for my car. And that's all I'm going to want. No, you did not. You did not join this industry to just make a little bit of money. So stop lying. Stop pretending that the good luck fairies are going to hear you and say, oh, well, look, see, he's not greedy. She's not greedy. You know, it's just like people when they play the lottery. You know, if I win the lottery, you know, it's $150 million. They're trying to buy $20 tickets or whatever it is. If I win this, I'm going to give so much money to this charity. You're not going to give anything to anyone, so stop lying. Stop lying to yourself. You think by saying that the universe is going to say to you, now let's do this. Let's bless that person. That's not how it works. It requires work. You got to work here. This is work. Just like you got to work for your paycheck that's coming. You have to work here. It's as simple as that. It's a transaction. You are investing your time to be able to reap a reward at a later time, and you're the boss. You're the employee. You are the benefactor. What's so hard to understand about that? It's win-win. You are controlling your employee, and the employee is the boss. You get all the benefits of an industry or a corporation, all the write-offs, all the perks, every car that I have, all these high-ticket items. They're just all write-offs. You pay for your car to get you back and forth to work, sit in most of your time and commute sometimes, burning gas, miserable, and you can't do anything except for just pay the bill. Then you got to pay income taxes on the little bit of money that you earn. That's what you want to do? That. You want to stop this. You want to stop this and not press through so you can do that the rest of your life. Well, if that's really what you want to do, who am I to stop you?